Holy shit, you guys should be jacked up for today. You have Apple earnings, Amazon earnings, and after hours. Tomorrow, you have the PCE data that comes out, as well as other major market moving catalyst. So guys, let's talk about what is going on today, what the kind of expectations are for the day, for after hours and Apple and Amazon earnings, what I personally think is going to happen, go over the data and everything else you guys need to know, as well as how AMC cannot not go through a short squeeze. There will be a short squeeze. Will it happen after Apple and Amazon report earnings, as well as the PCE data that comes out tomorrow? Will that help to start a short squeeze with AMC? I don't know. It looks like it is a possibility though. So guys, let's get straight into all of this information. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section, because all of that is free 99 to do so. But if you guys want to come trade with me live in real time, get access to every time I make a trade, link down below in the description of this video. So first things first, S&P quite muted on the day with a pretty dull response. You're pretty neutral, right? You're only up 0.03% at the time of recording this video at a major resistance level, which is the 50-day moving average. So far, we've got rejected the last 3 days from this level, and it is because of earnings. We don't know what to expect out of Apple and Amazon earnings, but really Apple is the big one. And Apple is very interesting because we have very high expectations for Apple. We expect Apple's Q4 services revenue to rise nearly 10% year over year, topping $20 billion. And revenue for Q4 at Apple is projected to grow 6.3% from the year ago quarter to $88.6 billion. Now, the year ago quarter was Q3 of 2021. There was stimulus up the yin yang, right? There was a lot of money out there. And now we're not seeing that. Now you're seeing some rumors about Apple cutting production of iPhones. You're seeing some troubling signs, at least over the past couple of months, that Apple's revenue might be starting to slow down, and you're still expecting that growth quarter over or from the year ago quarter, right? So you have some pretty high expectations to top with Apple. If they can top those expectations, well, it's probably going to be off to the races for Apple. If they cannot, well, you see what happens if companies miss on certain metrics of growth. It has been nothing but a bloodbath. And if you actually look at Apple, Apple has been doing very, very well, relatively speaking, throughout 2022. You're still well above where most stocks are. A lot of stocks are at their COVID crash lows. And for Apple, that would be in the 50 to $70 range. You're sitting at $146 on Apple with about a 25 forward price to earnings ratio. And for the S&P, just for context, you're sitting at about a 14.5 to 15 times next year's price to earnings. So if Apple has bad earnings, well, hello down below. You could be looking at as low as 115 over the subsequent following next couple of weeks, just depending how good or bad their earnings are. Obviously, you could have a lot further down to drop, or potentially if they have really good earnings, say hello to 160, 165. That is also in the cards. And this is going to be the most challenging quarter, I think, for Apple, quarter over quarter, year over year, to actually beat. So if they can, it's going to be great. If they cannot, it's going to be very, very bad. And that's why the markets are really struggling around this 50-day moving average, because we just don't know what Apple earnings are going to be. If they're really good, like I said, you're going to break out above the 50, above the 100-day moving average on the S&P 500, coming likely tomorrow. And then that's going to put us in this weird range heading into Fed Jerome Powell next Wednesday, where you could go as high as 408. And that would be the 200-day moving average, a level in which the last big rally we had back in August was rejected off of. Kind of the same thing happened if you guys think about it. You know, we found a little bit of resistance around the 50-day moving average a couple times. You broke out above that, you came up to the next key level of resistance, came down a little bit and found support at the 50-day moving average, then broke out above the 100-day, found some more resistance, and then broke out to the 200-day moving average. And now, depending on what Apple says and how they report, that's going to dictate how we trade tomorrow and throughout the beginning of the week next week. And then what Fed Jerome Powell says on Wednesday about potentially slowing down the pace of rate increases will make all of the difference. And just for context here, if you guys don't watch the channel, if you guys haven't seen what has been going on, the Bank of Canada just yesterday shocked the markets and gave the markets a smaller than expected rate hike. This is kind of what market participants over in America are expecting Fed Jerome Powell to do at this next meeting, not necessarily give us a 50 basis point rate hike like Canada and what the Bank of Canada just did. We're expecting a 75 basis point rate hike this upcoming week, but we're expecting the Fed to signal smaller rate hikes after that. And if the Fed does that, that's probably going to be very, very bullish. If the Fed does not do that, well, I would imagine there would be a lot more pain down at least to new lows for 2022. And that's what we really have for major market moving events. But tomorrow you also do have some data that will be coming out, and most importantly will be personal spending month over month for September and personal income month over month for September as well, coming out at 8:30 in the morning. You do have core PCE as well that comes out at 8:30 in the morning, and this is the main metric of inflation the Fed likes to pay attention to, and we are expecting a 0.5% month over month PCE inflation reading, and the previous was 0.6%. So you're expecting a month over month decline, but you are expecting the consensus of a 5.2% year over year gain for PCE compared to last month you had a 4.9% reading. So you're expecting a year over year gain but a month over month drop. So if that happens, that would be very, very bullish in my personal opinion. And the Michigan Consumer Sentiment Survey does come out as well tomorrow, and that could also move the markets in a big way. Besides Apple and Amazon earnings, you have Intel, Arthur J. Gallagher, Pinterest, United States Steel, T-Mobile, Southwestern Energy, Gilead, and First Solar. Obviously, these three are going to be the most important, but Apple is going to be the top dog. Amazon will also be important, but Apple will be the one that is very, very important to the markets. Now, nonetheless, we've covered a lot in a very short amount of time, so let's dive into the nitty-gritty, the details around AMC stock and the situation with the short interest being 20%. I will say it again, I've said it before, there is no way we will not see a short squeeze with AMC stock. The question is, when will this actually happen? What will actually cause this? In my personal opinion, if Apple has decent earnings, or even if they have bad earnings, in a weird way, if Apple just completely gets destroyed on earnings, that's probably a bullish thing heading into the Fed meeting, because that would show demand is slowing down, something the Fed wants to see. It would also really squeeze out one of the last safe places in the market, because throughout 2022, you've seen people rush to oil, you've seen people rush to commodities, rush to precious metals, rush to certain things that have all since gotten destroyed, but Apple is really one that has not. So in a weird way, it could be bullish if Apple does miss on earnings, but either way it goes, I think you're leaning towards a bullish response. I don't know if this will cause the short squeeze starting tomorrow throughout next week, or if it would be after that. But the point blank period truth of this is, with a 20% short interest and with shorts stubbornly aggressive in their short positions, there's no way you will not see a short squeeze. Let me know down below in the comment section, do you guys think another short squeeze is on the way here shortly, or do you think it could be a couple of months, a couple of years before a short squeeze happens? Let me know your thoughts on that down below in the comment section. Nonetheless, the estimated short value is sitting at $686.51 million. The estimated short interest of free float is sitting at 20.06%. It just came out at 20% yesterday with the actual settlement date that was released by the SEC. And the free float out on loan sitting at 35.09%. The shares out on loan 180.81 million. Days to cover 4.79, and cost to borrow sitting at 18.96%. And again, 100% shared utilization. That's why I'm saying, guys, these shorts really just want to short as many shares as they can get their hands on. That, mixed with potentially a Fed U-turn and a bottoming in the markets, will mean a short squeeze, not just for AMC, but for the broad markets. But stocks like AMC that have 20+% short interest, those are going to be the ones that can really benefit the most. Now, as far as the cost to borrow rates, the cost to borrow max is sitting at about 20.14%, which is still very, very high. Cost to borrow minimum at 14.13%, and cost to borrow average at 19.09%. So these numbers very, very high over here as well. If we look at the option activity for the day, we are seeing 3 orders totaling $95,000 with a positive order value of 100%. Now, before we take a brief look at the charts, we will look at the S&P 500 option activity as well, heading into Apple, Amazon earnings. Can give you a glimpse into potentially, what could happen. And give it a second to load. As of right now, you're looking at about 2,000 orders so far, totaling $185.74 million. So it's a relatively slower day as far as the dollar amount for S&P 500 options, which makes sense ahead of a big, market moving catalyst. A lot of people are just going to opt to play the after effect of Apple. If Apple has bad earnings, it could get really bad because people are going to wait. And then if they're bad, people are going to short the stock. If they're good, people are going to wait, and then they're going to buy this stock. So that move in after hours, like you've seen with Facebook, that initial move last night was 7% down. And now look, you're down 20+% today because people just kind of start to short the stock once they realize what direction it is going to go in. But nonetheless, a positive order value of 91%. So that's pretty much going to be all for this video. If you guys do want to look at AMC's chart here just briefly, we'll go ahead and pull that up. And a lot of indicators are at least suggesting to me that we could be in for another major rally, because even if you look at the RSI, you're still under 50. So you're under the neutral level. So you're oversold still. The MACD just started to go positive, and even if you look at the moving averages, you're still well under the major moving averages. And if we do get a Fed pivot or good earnings, well, that could potentially send us at least to the 50, 100, or 200 day moving averages in between $8 and about $10 per share, guys. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.